the best strategy is one, find motivated seller. There will be motivated seller on the market. So try to find them, get some good financing condition. There will be motivated sellers, so it's going to be easier to find them.
Hello, and welcome back to the Real Estate Investors Club podcast, show dedicated to real estate investing. And today we are here with Jean-Philippe Claude, founder of the Real Estate Investors Club. How's it going, man?
Hey, it's going great. What about you?
Good. A lot of quite a bit of stuff on the go on the real estate side, and actually a closing to this week. Finally, it is the last one before the holidays, and after that, it's time off. But I was hoping to take a little bit of time with you today because there's a lot of stuff happening on the market. Obviously, we all know of the big increase in interest rates and the fear level amongst investors that's been rising, and be happy to see and get your take on it, and what would be some advice you would give to investors who are looking to jump in right now. So first of all, are you still looking to buy?
I got a closing tomorrow. I can't recall if I've discussed that before on other podcasts, but 69 units, it's closing tomorrow. So everything's in line. So you should be sending the money anytime soon, actually. So pretty happy. So yes, I'm still buying. And to answer the question, of course, it's a time of uncertainties. So people are a bit worried. I don't believe the market, the values are going to move. I don't think so, because there's so much upside. Yes, the interest rate is one, but if you look at the pressure on the rents, we're missing, I think, like 60,000 apartments by 2030. Yeah. Which is crazy in the province of Quebec, if we're discussing about Quebec. So there's going to be a huge pressure on the rents. Also, the other interesting facts is the replacement cost with everything that's related to construction is so expensive right now. So if you're buying a used building and a new one is building next to you, the replacement cost of that used building versus a new building is way different. And it's much cheaper a used building right now than building a new. So it's still competitive to buy used because of that replacement cost also for new units. So I think this is going to help also the used. For all these factors, yes, maybe it's going to drop a little, but it's not going to be that much. I was with Patrice Ménard at one of the events of the club. He was thinking about 0.25% cap rate change, going higher cap rate, meaning lower price. So it's about a net revenue multiplier of 1.5. So it's barely you're not going to sense it on the market at all. So and I agree with him. I think it's going to stay within that bracket because of everything else that's pushing the pressure on the market.
Yeah.
Should we buy now? Yes. I got a few advice for people jumping in the market. It's now going to be a more balanced market. So it's not going to be a seller's market like it has been like for the last 20 years almost. So, so it's going to be a more balanced market. And in a balanced market, it's going to be easier to find some deals with good financing condition. Speaking of balance of sale, for example, in the deal I'm actually closing, the 69 units, it's 13 million. We got 2.4 million in balance of sale, 8 million in financing. So that's the kind of strategy that the seller are more willing to do now because of the interest rate going up, which went down a bit, by the way. We went up to 3.9 and the CMB, now we're at 3.4. So there was a little bit of wave. It's going to keep going up, I believe, but still we're just in a little bit of a valley there. But find some motivated seller. There will be motivated seller on the market. So try to find some good financing condition. That would be one thing. Go ahead.
It's a good reminder what you just said about maybe being more of a balanced market, because it's true that in the last couple of years, everyone's been so used to having to be extremely aggressive to get offers in the door, offers accepted and taken seriously. Whereas now it will be okay to put back a few conditions that people had omitted, such as the inspections.
Of course,
And
never, yeah, never buy a building without an inspection.
no,
I'm telling you on the podcast, this is a really bad idea. Yeah.
yeah. But to be a little bit more conscientious of that, of sometimes, everything before you got to go fast, you got to remove the conditions and stuff like that. Whereas now financing is going to be a little bit more complicated, and financial institutions aren't going to be as generous like they have been in the last, let's say, 3-4 years. And there will be less offers. So now is also going to be the time to make aggressive offers. I was going to say on the lower end, you see something at $1 million, offer 850 and just wait and see. And you might be surprised.
Yeah. And think about that also, Excel, for the financial institution, they were just like, there was so much demand that they could be like very difficult with their borrowers. Now, if the volume is reducing, I've just talked with Desjardins last week, and they're still busy, but they're busy explaining the MLI Select program. They're not busy making loans anymore.
Yeah.
And you know how the banks are working there. They need to lend that money out, but they're not. I don't think they're going to change the debt coverage ratio, that kind of stuff. But we're going to see amortization go a bit higher. It doesn't make any sense. I mean, 25 years, the building in 25 years is obviously still going to be there. So amortization in conventional banking is going to stretch up. It's already starting in the new. We see a Laurentian Bank going 30. So there's going to be different financing conditions. Stretching, and the banks are going to be a bit more interesting. Again, the balance between banks and buyers, like sellers and buyers, are going to be more balanced.
Yeah. And now in terms of market, so we all know you're very multifamily heavy. If that might be in fact everything that you have. I have some friends that have only been doing some short-term rental and some Airbnb cottages, and they're telling me like occupancy is dropping. This summer isn't nearly as good. And so my question to you was, do you see any other asset classes that are as resilient as multifamily in a period of downturn? Like what would you invest in?
Industrial, 100%. But the problem is it's not entry level sophistication investment. Multifamily, okay, don't get that wrong, because I'm teaching real estate, obviously, but you don't need to be that much sophisticated to start investing in multifamily. You lose a client, you just put an ad on marketplace, get that client back. But if you go in industrial, then you need to have a good network of different types of company that could like be your tenant there. So you need a level of sophistication a bit higher. The risk is higher too, but there's basically no empty industrial building anymore. And industrial was such a class that was discarded before, because the rents was like $5 to $6 a square foot, and now in the last 2 years it's gone to $14 a square foot. Like, this is how much the rents have been exploding in the last 2-3 years for the industrial market. It's absolutely nuts.
And there's also been some good structural changes in the economy that have pushed that sector big time.
Well, you got problem in supply chains. So the supply chains, I think the companies try to get back their supply chains. There's also the web,
pick and pack.
All the sales made on the web. You need some storage there, and some dispatch. So everything combined is a good pressure around the industrial. So I think, residential, commercial, depending on where you're located. Industrial, very good.
What about some new construction?
New construction, very difficult these days because of, again, the supply chain. So I would not recommend somebody to start new construction now, because the supply chain is very hard. The manpower is hard to get. There's so much volatility in the prices also. I can't say don't start with this, but at least start with a small project, because there's going to be there's going to be so much uncertainties in that project. And also you need to have a good stress test, because if you refinance in 1 year, 2 years, It's going to be difficult. The cities are so long to get the permits also. So in Montreal, we have an average of about 2 years. If you buy the land and you start getting your permits, it's going to be about 2 years. Yeah. So that's very terrible.
And I just, thanks for bringing this up, because I don't know about you, but I'm so tired. I feel like there's so much bashing on landlords and real estate investors, but it's the real estate investors who add units to the market, who renovate old 6-plex, 12-plexes in order to house families. And it's difficult right now. I find the general environment is not only difficult with financing and everything that you just mentioned, but the human sentiment is also not pleasant, because the minute you say you're a landlord, you're labeled as I'll stay polite, but you're labeled as an asshole.
Yeah, that's it. There's criminals and real estate investors just below. Like, this is how much we're popular. I was supposed to do a TV show on landlords. Last year we've done, I think, 1 day of production. Okay. So I declined because of the image and the perception. And if I could say to La Presse or Radio-Canada, whatever, saying like, every person that has a roof today, almost everybody, it was built by somebody who wanted to make money in real estate and build that building. So you have a roof because somebody was interested in making a profit in building this building. So you have a roof because of real estate investor. Like, it's not the city that builds the apartments, it's the real estate investors.
Yeah.
Like, it's the promoters and stuff.
And this is where, and I'll just pick an example. We're working on a project in Verdun for a duplex. We can add 2 floors. So we'd like to take it to a 6 units. And the city is saying, crise du logement, we need more dwellings, increase supply. Just getting an appointment and getting a feasibility conversation with them is pulling teeth. It's been months. And there's such a disconnect between what the politicians say, what the city hall says, and what the Office of Urbanism actually translates into. And I think we're all sadly paying the price for that.
What's funny is that everybody wants more dwellings. Like, we need dwellings. Okay, where do we put it?
Give me a permit.
Have a new law where, that's it. There's a new law on the South Shore. There's few gulfs that have been protected. So now you can't build on those gulfs. And there's also a good article, sorry, that's the French getting out, a good article in La Presse about the densification, and in Fairview Point Lie, if you know the area next to the REM station, they were planning to build some not skyscraper, but at least like towers of maybe 10 or 12 stories high next to the highway in a parking lot of a centre d'achat, like a commercial center. And it was not disturbing anyone, disregarded by the city. This is just,
it makes no sense. And it's well connected, and there's some commercial space around it. It makes no sense.
Commercial next to the REM station, like, there was perfect. And I know I'm coming from this area. I know that this parking lot has never been full since day one. That there was even in Christmas Eve, like before Christmas Eve, there was nobody in that parking. So it was a perfect spot, declined by the city. So like, everybody's they want more dwelling, but not dans ma cour.
C'est ça. Yeah, not in my backyard.
Yeah, that's it.
Yeah, it's tough. Crazy. It's tough, and it'll be interesting to see how the next couple of months, and I was gonna say couple of years, develop. I mean, we're all in this for the long run, so we'll stick around.
It's really sad for people, but on the other side, it puts pressure on my actual apartments. So it's like, it doesn't make sense. Like, I'm super upset about this, but on the other side, look, it's going to put more pressure on my rents, and people are going to keep complaining that the rents are going up. It's just, it's so stupid. It's so stupid. And the city is like 2 years. This is 2 years where there's no dwelling available for people. Like, it doesn't make any sense. Like, and there's taxes there. It's 2 years without taxes on dwellings that could exist right now. So anyway, I'm not a politician. This is something I can't change unless I'm going to politics, but this is something we got to play with.
Yeah.
And It's the way it is.
Is this in our case? We bought a building fully vacant. It's a 4-unit in Laval next to the quartier metro quartier,
Yep.
and we asked for a building permit in January. We still don't have it. And now every time, and we said to the city, like, ideally we're aiming for July 1st. And now every time we talk to the city, we say, well, there's 4 families who can't be housed because we haven't been able to do the renovations because we're still waiting for you for the permit. And every time we talk to them, we tell them that now, because we also want them to take some of the responsibility. So anyways, not always pleasant. All right. Last word of wisdom, JP.
Okay. I've said that in the class before. So if you want to jump into multifamily, okay, I think the best program there is, the best strategy is, one, find motivated seller. There will be motivated seller on the market. So try to find them, get some good financing condition. There will be motivated sellers. So it's going to be easier to find them. So one, so it's going to reduce your down payment. Second option, if you don't own anything, I think still duplex, triplex, fourplexes with the CMHC, insurance, where you can get 5% down payment for duplex, 10% triplex, and fourplexes, is really good to start in real estate. It's the best tool. And if you want to go a little bit higher, look at the banks, like the 6 to 12 units. They have some flexibility where they could finance it personally. So you're not going to be affected by debt coverage ratio. It's going to be on your ratio. Be careful on that. Yeah. There's a good chance that the building could be negative cash flow. So you need to check that up too. But at least the financing is going to be way higher. So I think that these 3 strategy, motivated seller, if you start with duplex, triplex, fourplex, it's a good strategy. Or 6 to 12 units. I know Desjardins have some program. I know RBC have some programs too. With personal financing with these buildings. I think it's a very good strategy these days.
Mm-hmm. Very good points. And for everyone listening, keep that as a motivation, follow that advice. And of course, keep listening to the podcast, subscribe to the show, share it with a friend, and send us some feedback. It always helps. So JP, thank you very much for your participation today. Always a pleasure to have you on. And we will stay tuned to anyone listening. We will have some more coming. And in the meantime, have a wonderful summer. Keep researching your market and make some offers. Thank you.